I think you're saying that you still think this is going to be a pause here, right? Give me some numbers for SPX. I mean, is it going to hold 5,000?
Oh, sure. Absolutely. So look, Marty, the reason why I think it's a pause year is simply that from the low of October of 2022 through the end of last year, so that was, 2 years in a month, 2 months, the market's up 67%. That's a massive move in a short period of time. And the result is that we began this year with a lot of optimistic predictions. Wall Street, the average price target for year end when we began the year was 6,600. Retail flows had turned decidedly positive, which, it's tragic because many investors missed out in the last 2 years. So it's not unusual to have a third year after 2 strong years of a lackluster returns because expectations have grown so much. So that was my prediction at the beginning of the year. But, inevitably, when you have kind of a lackluster year, it just means more volatility, and voila, that's exactly what we've seen. And so I still am in that camp because, I still think the multiple is a little high. We need to work off some two very strong years, and I could see a scenario where earnings growth for this year is actually a little better than the stock market return, and the multiple comes down a bit. That would be healthy. Maybe I'm hopeful, but that would be the kind of the healthy scenario. The other reason why I think it's a pause year, Marty, this is really important, is these big guys, the Mag 7, they're spending a lot of money on AI rollout, and so their return on invested capital is coming down because they haven't seen the return on this investment yet. I think it will happen. I'm just not sure it will happen this year, and they're a very big weighting in the S&P. So I think that will also be kind of an anchor to the S&P this year.
Andrew, tech, AI, potential decoupling between the U.S. and China, which is, I think, what both sides want to see happen, or certainly Washington wants to see happen. And going back, this is, what's it been now, two and a bit months? DeepSeek, when China dropped DeepSeek, it just rocked the entire tech world, right? And caused the kind of selling that we've seen in the Mag 7. And when I think back to every time China gets into a key industry, right, we've seen what's happened to EVs, et cetera. People like to joke that, look, you got a room. When China walks into a room, profits walk out. Is it likely to be the case this time around, or if there really is significant decoupling between AI China and AI US, is AI US and the Mag 7 in names like NVIDIA, are they safe?
Well, the most important message is it makes me more confident about Chinese technology companies, because these kind of walls have been built by the politicians in Washington today, means that China's going to need to support their technology companies more, a la DeepSeek. So I think it's bullish for China, but I think there's plenty of demand out there for semiconductor chips here. I'm more focused on the hyperscalers and the fact that they're not seeing the return yet, because in many ways, all this uncertainty towards tariffs and so forth, it creates a pause in corporate America and elsewhere in the world to really spend CapEx on kind of the AI rollout, which is ultimately we will need. So I could see a scenario where these Mag 7 lag for the year, and then really start to see the return next year and actually perform better next year. And that would kind of fit with my scenario of a pause year this year. Not terrible, because I think too many people are still on the sidelines. I still hear about the levels of cash out there, but of course people didn't step up and buy when the market was down 18%, because they want to pull back, but they never actually step up at the key junctures. But that's why I don't think it's going to be more sinister than a pause year.